Imagine opening your paycheck and it's smaller than it should be. You didn't agree to it, your boss didn't cut your hours, but a chunk of your money is just gone, sent directly to the government before it ever hits your bank account. This is not a hypothetical. This is happening to millions of Americans right now in 2026. And if you have student loans, you need to understand exactly what's going on, because the number of people this is hitting is growing every single month. Let's start with the basics. Over 42 million Americans have federal student loans. Of those, more than 5 million are currently in default. And another 3.7 million are over 270 days late, which means they're in default too. They just haven't been officially notified yet. When you add it all up, roughly 1 in 4 federal student loan borrowers is either in default or dangerously close to it. Here's what default means. If you haven't made a payment on your federal student loan in 270 days, that's 9 months, your loan is officially in default. And once that happens, the government has powers that no private lender has. They don't need to take you to court. They don't need a judge's approval. They can go directly to your employer and order them to take money out of your paycheck. That process is called wage garnishment, and as of January 2026, it is back in full force for the first time since the pandemic. Here's how it actually works. The Department of Education sends your employer a garnishment order. Your employer is legally required to comply. They have no choice. Starting from your very next paycheck, they withhold a portion of your pay and send it directly to the Department of Education. How much can they take? Up to 15% of your disposable income. Disposable income means what's left after taxes and mandatory deductions. So if you take home $3,000 a month after taxes, they can take up to $450 of that every single month. There is one protection built in. The government must leave you with at least $217.50 per week. So if your paycheck is already very small, there's a floor. But for most working Americans, 15% of take-home pay is a significant hit, especially if you're already stretched thin. And it doesn't stop at your paycheck. The government can also seize your federal tax refund. They can withhold Social Security benefits. They can take federal salary payments. The wage garnishment is just one tool. They have several. Now here's what a lot of people don't know. You won't necessarily see this coming. The Department of Education is required to send you a 30-day notice before garnishment begins. But that notice goes to whatever address they have on file. If you've moved and haven't updated your contact information with your loan servicer, you might not get it until it's too late. And the scale of this is only going to grow. In January, they started with notices to about 1,000 borrowers. That number has been increasing every single month. By the time you're watching this video, hundreds of thousands of people may already be receiving garnishment notices. The other thing worth understanding is how we got here. During the COVID-19 pandemic starting in March 2020, the government paused student loan payments entirely. No payments, no interest, no collections. That pause went on for years. Payments were supposed to restart in October 2023, and they did, but millions of borrowers either didn't know, couldn't afford it, or assumed the pause was still in effect. The result is a historic wave of defaults unlike anything we've seen in modern history. So what can you do if you're in default or worried you might be? First, find out where you stand right now. Go to studentaid.gov and log in. Check your loan status. If it says in default, you need to act immediately. If you don't know your login information, call your loan servicer directly. Second, if you receive a garnishment notice, you have 30 days to respond. Don't ignore it. You have the right to request a hearing if you believe the garnishment would cause extreme financial hardship, if you've been recently unemployed, or if you believe there's an error in the amount owed. Request that hearing in writing within 30 days. It can pause the garnishment for up to 12 months while the case is reviewed. Third, look into loan rehabilitation. This is a formal program where you make 9 agreed-upon payments over 10 months. Once you complete it, your loan comes out of default, the garnishment stops, and the default is removed from your credit report. The monthly payment on a rehabilitation plan can be as low as $5 depending on your income. You read that right. $5 a month. Fourth, Consider consolidation. If you consolidate your defaulted federal loans into a direct consolidation loan, your loans come out of default immediately. There's a catch. You have to either make 3 on-time payments first or agree to enroll in an income-driven repayment plan. But this is a faster path out of default than rehabilitation for many people. Fifth, update your contact information everywhere. Go to studentaid.gov and make sure your address, phone number, and email are current. Do the same with your loan servicer. A garnishment notice you never receive is still a garnishment you can't stop. Here's the bottom line. If you have federal student loans and you've been ignoring them, the time to ignore them is over. The government is no longer waiting. They are actively collecting, actively garnishing wages, and the number of people being affected is growing every month. The good news is there are real options to get out of default. Rehabilitation works. Consolidation works. Even a $5 monthly payment can stop the bleeding and get your loans back on track. But none of those options work if you wait until the money is already being taken from your paycheck. Act now. Check your status. Know where you stand. If this helped you understand something that nobody bothered to explain, subscribe. New video every week. No jargon, no judgment, just the financial information you actually need. See you next week.